Fundamental analysis does not mean only looking at P&L, balance sheet, and cash flow statement, and that's it. It's a much broader term, and we're going to deep dive into what exactly fundamental analysis means, what are the things we're going to look at in this particular video. So, hello and welcome. This is Amit Pobat, welcoming you one more time on Amazing Investing Mastery Series. And I hope you have gone through all the past videos that I've recorded for you guys. If not, start from day number 1, come to last video, and then only start with this video so that you get the better understanding. So, generally, it is perceived that in the last video I talked about when you want to select a stock, you can have a combination of fundamental as well as technical analysis, and that blend will give you some super amazing results. Having said that, when we say fundamental analysis, the generally perceived concept about fundamental analysis in the mind of people is, okay, Amit, I'm going to look at the balance sheet of company, I'll look at the P&L, I'll look at the income statement, I'll look at the cash flow, I will read auditor's report, I'll read director's mission, vision, all that. No. It is just one part of that. Fundamental analysis does not mean only that thing. We got to look at many, many more things if you want to do the real, practical, fundamental analysis. If you found this a bulb on moment, you can type BO in the chat box, that is bulb on, right? Generally, it is conceived like that only, but let me just take you through my slides and I'll clear it more. So generally, as I said, fundamental analysis is understood in narrow term by majority of the investors. According to them, fundamental analysis means only understanding and analyzing company's finance statement. But in fundamental analysis, apart from just income statement, balance sheet, cash flow statement, auditor's report, director's report, we also do broader fundamental analysis. So what do we mean by that? We can use a top-down approach best to do the fundamental analysis. Now, this is something that is very scientific, very proven, and it has been generating good results for investors since history, right? It is not something new I'm going to teach. Yeah, probably you might feel it is new, probably because you might not be aware about that, but this is something very basic. Every good investor has been doing it and will keep doing it for the long, long time. So actual company's financial statement is the last thing that we look at, right? For many people, fundamental analysis start from company's income statement, balance sheet, P&L, and ends there only. But for us, we are gonna look at that thing at the absolute last. Does it make you exciting about what are we gonna learn? Just type excited in the chat box if you're super excited hearing my words that, okay, income statement, balance sheet, cash flow is the last thing that we're going to look at, right? Please do type in excited, because your comments give me a lot of energy and I check them personally. So what do you mean by a top-down analysis? We will have a series of video on that, because each topic is such a broad topic we can discuss for hours and hours. But of course, I'll try to keep it crisp, concise, so that you get the major value. So in the top-down approach, the first thing that we do is macro analysis. Second thing that we do is a sector or sub-sector analysis. And third thing that we do is the company analysis. That's the last thing that we do, my dear friend. Now, what do we mean by macro analysis? If you've been a student of economics, you also might have heard about these terms like microeconomics and macroeconomics. So first thing that we're going to look at is the macro things. Now, what do we mean by macro things? So before we doing companies analysis or even sector, subsector analysis, it is important to understand which phase the country is going. This is very, very important, my dear. We are not looking at what company is doing, what has been sales, what has been sales growth, what has been revenue, what has been revenue growth, is company debt free or not, what is the debt to equity ratio. Those are all things that are going to come at a later stage, and of course we're going to look at this in this particular very series itself. So one request that I can make you right over here is, if you're not subscribed to our channel, please do it right here right now, because we are going to bring some amazing content for you in the time to come. Coming back to my point, company alone cannot perform good or bad. Company alone on its own strength, on its own power, cannot perform good or bad in either particular case. Majorly, each and every company's performance, which you're going to invest or which you're going to reject, depends upon the situation at macro level. I'll give you some examples and probably you will agree with me. And of course, one request that I'm going to make to you guys right here is please, please, please keep comment box on fire because I look at each and every comment of yours. Now, guys, tell me if there are geopolitical tensions going on right now when I'm recording this video on 2nd of July, there is a war going on between Russia Ukraine. Of course, there has been a ceasefire agreed between Iran and Israel, but a few days back there were fires and missiles were being fired between Iran and Israel. A few days back, in the month of June 2025, India and Pakistan were having some tensions. So now I want to ask you guys, and I want you guys to comment on this. If there is a war-like situation between Iran and Israel, don't you think every company, every company, every company of Iran and Israel will see some heat in their performance? Yes or no? If you agree with me, just give me yes in the chat box. So when you're trying to invest, long term or short term, that's a different story. We're going to discuss that at a later point of time. But the point I'm trying to say is if there's a war-like situation, companies are going to get affected, right? Like for example, if second impact, second factor that affects the macro politics is the government policies. Government policies impact hugely to any company's performance. Just to give you one example, in the recent budget, government of India has been focusing on Make in India, and particularly they have been emphasizing on Make in India as far as defense stocks are concerned. I mean, defense sector is concerned. So don't you think, guys, due to this government policy of Make in India, especially in the defense sector stocks will give a will get a big boost. Don't you think that? So now tell me, if you have been analyzing a company's P&L balance sheet for last 5 years, you've calculated the ratios and all that, and you found that okay, since past year, since last 5 years, defense stocks haven't performed good. I'm gonna skipping it, but you're not aware about the government recent policies. Make sense? So let me cover that. A company's performance mainly depends on a geopolitical situations, as I told. In a war-like situation, definitely defense stocks are going to go up. In a war-like situation, defense stocks are going to go up. Like if there's a war-like situation in the Middle East, Qatar, Iran, Israel, Saudi, and all that, you tell me, which company will face the biggest heat in India? You tell me, you tell me, you tell me. This is an open question to you. If there is a war-like situation going on in Qatar, Iran, Israel, Saudi, Dubai, all OPEC countries, like all producing companies, in India, which company will face heat? But naturally, Reliance will face HPCL, BPCL, all these companies are going to face heat. So geopolitical situations impact a company's performance in a big, big way. Second thing is budget. As I said, as I'm observing the budget of Union Budget of India of 2025 2024, there has been much emphasis laid on the defense and particularly homegrown defense system. We have seen BrahMos missile has been produced in India, and and the fighter jets and all that. So because of that, definitely defense stocks like HL, Hindustan Aeronautics. See, this is not a buy sell recommendation. I'm just giving you concept. Please don't construe anything being spoken over here as a buy or sell concept, right? So HAL and all the defense stocks will definitely see a huge impact. Second, government incentive systems. Like in the past few years, we have been seeing that government has been incentivizing renewable energies like solar systems. Like I belong from Gujarat, so I know that our Gujarat government gives subsidy if you install a solar system at your home because government is focusing on green energy. So because of this, if a company is focusing on green energy, won't it just skyrocket because of the government policy? And we have seen that when I'm recording this video, Reliance Power has been on a skyrocketing journey since it entered into this green energy zone. So government incentive system, where government is incentivizing. There are a lot of things that, a lot of companies get impacted because of the government policies. Okay. And the last is, of course, RBI monetary policy. Again, it depends. RBI monetary policy depends again on which phase the economy is going on. If the economy is going on through recession, let me explain this. If the economy is going through recession, what do you mean by recession? uh, Jobs are being cut, people don't have money at the disposals. So what do central bank, if we talk about Indian perspective, what does Indian RBI does? It ensures the bigger flow of money in the market. Now, for example, if there is a bigger flow of money in the market, what will happen? People will start buying capital incentive goods like cars and all that, right? Now, when people start demanding more cars and more capital incentive goods, those companies which are in that sector, definitely they will get the big boost, and their performance, their P&L, their financials will of course skyrocket. Now, what will happen? As a result of increase in production, they'll need more employees. So employment will be there. Due to employment, unemployed people will start earning. When they start earning, they have the money at the disposal. So probably consumer durable sector will also get some boost, right? And in fact, to be honest, premium consumer sector. So, my dear, what I'm trying to tell you is each and every company is hugely impacted by the RBI policies. Like if repo rates or if CRR rates is reduced, there'll be a big flow of money in the market. And when there's a flow of money in the market, of course, capital goods like, car companies, automobile companies, other capital good, luxury watches companies, gold companies, like there are many gold companies listed in India as well. Their stocks can go up. And if there is a hyperinflationary situation, what RBI starts is RBI start you know taking the liquidity back. It start the liquidity back, and once the liquidity is being taken back, now you might ask me, how does it do that? So simple thing that RBI can do is it will increase the interest rates. So loans will get costly, deposits will be higher. As a result, what will happen is people will start focusing on saving, because right now the interest rates are high. People will look to lock their money at that particular rate. Having done that, people are more into savings rather than spending. Of course, the interest rates are high. So those who are buying cars and housing and all that, real estate, yeah, real estate is a big sector that is affected by the RBI policies. So if interest rate goes up, people delay the decisions of buying commercial properties, housing, and so all the real estate stocks will get affected. Tata Motors and all this, Mahindra and all that, their companies' sales will go down. So, my dear, what I'm trying to say over here is you got to be doing a macro analysis first, like which phase country is going on, not company, country, recession or inflation, where government is more into, like which sector government is incentivizing and promoting, which sector government is not promoting, in fact de-incentivizing. All these factors will affect your company's performance, all these factors will affect your stock selection, and that is why you got to understand all this. So I hope you loved the video. In the next video, we're going to talk about sector analysis, and then we will go to the financial statement and all that, and then only the real fascinating journey of numbers will start. But this is really, really important. If you think this is important and you loved the video, just type awesome in the comment box, and I'll see you in the next video. Thank you so much.